What's up, guys? It's September 4th, 2024. Had a broad bear channel in the markets. I don't think it was the easiest to trade. I can definitely see people would try and buy breakouts, but we have to think about the context here. Daily chart, 45-minute. Bears got a gap, and it's happening on the EMA. So the position of the gap is important. Is it above, below, on? This one looks like it's just above the EMA for the Bears, so that's good. That shows that bulls are getting trapped and that Bears have a chance to see some more follow through. It's follow through, but there's a tail under both bars, so it's not the best follow through. Bulls would want to see a good close on today's low, so a bear bar closing on its low would be nice follow through, but it's still follow through and there's still a gap. So bulls that buy the high of this candle are going to want to get out break even at 50%. So we put our first price there, bottom price there. That's the 50% for the bulls. We get trapped at the high. They don't get an opportunity to get out, then we have bear pressure starting to stack up. The gap is closing. This gap is being tested. 45-minute chart, kind of somewhat see a double bottom. More bear bars, not the strongest bull close here, so it's not a strong double bottom, but just the price came twice down on yesterday and today. So there's a double bottom. Kind of hard to see. Yesterday we had a gap down and a bear trend that pretty much you could sell any bar and you would make money eventually. If you might have to scale in or hold a little bit longer if you got caught in this range, but you would make money selling any bar. Today we're at the low of that range. So yesterday's low is 76. Gap down, but big bull bar, so that's not the best for the Bears if they want to see a continuation. Bar 2 looks like taking profit. It's a big bar, so bulls that buy the lows are in profits and they might be reducing their position. This pullback gives people a chance to press their position and they get their leg 2 move here. Give me 2 seconds about the cough. Thank you. Look at the tail on 3. 1 more second. Okay, thank you. Look at the tail on 3. It's selling off at the EMA, so there are sellers at the EMA, but then 4, 5, and 6, it's a bull close, bull bodies. They're shrinking though. Bar 7, deep pullback, testing the breakout point of 1, and reverse higher. So it's not a good bear close. If you got short here, you had a brief opportunity to get out. Well, you actually had 5, 10, 15, 20, 25 minutes to get out of your short if you shorted the globe of bar 6. On bar 12, you would lose a tick, but you did have time to get out if this wasn't getting followed through. Another pullback, 7 bull bar, 8, 9 pullback, and then 10, 11, 12 becomes a buy the close rally. It's happening after a bear trend. There's a trend line break here. And what happens after the first trend line break? Usually a retest of the lows. So although this is a bull rally, it's a bull rally after first trend line break from yesterday's sell-off. And that usually can retest lows. And they got the retest actually on bar 67. Tested the low of 76 here. So there's some Albrook's price action for you right there. He talks about that a lot. Strong trend line break, look for a retest, and then look to get long. If you were buying the dip here, very good. Buying the dip here, you'd make a little bit of money. But it's still more bearish. The bear channel. Broad bear channel. Every new little bears are taking profits. Say it's like that. Could say it's like this. It's somewhat of a triangle. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Different ways to count it. After bulls get this leg 1, pull back. So leg 1, pull back leg 2, pull back leg 3. Strong sell. Leg 1, pull back leg 2, pull back leg 3. Leg 1, opposite bar, pull back leg 2, opposite bar. Trend line break 16, leg 3, 17, 18, 19. Wedge top. There are gaps here. I was long around this price action and I got trapped, but I didn't take a loss. I got out on the bounce around here. Something to think about. wedge top, trend line break. My target was a little bit around here, kind of targeting this area. It reversed and I had to get out. There was no chance for bulls. We bought the high of this. They would have to buy the high down here and they get out here. Buy the high, buy the low, get out at 50%. Range days are more forgiving if you buy highs, but you have to be willing to hold through a deep pullback. I'm not, so I hit out. I don't really recommend anyone averaging down, but that's on you. It's valid. There's a time and place for everything. You average down yesterday, you get crushed. If you average down today, you'll make a little bit of money because we're range bound. So we have a big up, big down, leg 1, pull back, leg 2, pull back, leg 3. You say pull back, leg 4. We're going more sideways, testing the previous swing lows of this range. Leg 1, pull back, leg 2, second leg trap, testing this high. Bad follow through 37, 39, 38. Bad follow through 38, 39. Strong breakout bar. If you thought 37 was strong, then what do you think about 39 reversing it and it actually being bigger? But this is just rough body to body. Just trying to make an example here. So it's a 10-point candle versus about 9-point bull candle. This bar is big. It's kind of climactic. Leg 1, pull back, leg 2 after a wedge bottom in a bear channel. Oh no, am I muted? Oh, okay. I don't think I'm muted. Oh no. All bull setups are getting, because sometimes I forget, I like start this recording and I forget to unmute it and I look at the thing, I'm like, oh man, I gotta restart it. I think we're good here. Look at the last couple of days, shorting the EMA is making money. Bulls trying to get the breakout here, it fails. Bulls trying to get the breakout here, it fails. Both good short entries. We're under the EMA, so the market regime's bearish. Leg 1, pull back, leg 2, sells off. Here's 3 pushes down. Here's inner ranges. We have to kind of apply legs and really pay attention to, just pay attention. We have to pay attention every day, actually. Leg 1, pull back, leg 2, pull back, leg 3. It's a wedge bottom with a bear breakout. Really weak bear breakout, has a lot of overlap. Look at these bull legs here. This pullback was strong enough to get leg 1, leg 2. Bulls that bought the high of 77 will buy more lower. They get out at the original price for a scalp on their second entry and break even on the first. They actually might have made a little bit more money with a tail of 61. They dumped the markets. Leg 1, pull back, leg 2. Because the market is range bound right here, right? So leg 1, pull back, leg 2. Again, second leg trapped in a range. Then bulls get the leg 1, pull back, leg 2. There were gaps that stayed open today. So although it was range bound price action. So let's draw these gaps. So we have a good bull leg here, but no gaps stay open. Then we have a pullback. Another leg here, still no gaps. Pullback, still no gaps. Here we have a first gap. The high of bar 12, the low of 14. Cool, that's good, but it gets closed on 16 here. Reverses, get a leg 2. We get another gap right here. Unfortunately, that also closes with 21. The low of 19 is 58.25. The high of 21, 58.75. So 78. So 21 went above 19's low by 2 ticks. So there's no gap there. No gap. No gap. These are negative gaps. And then we have a gap here with the low of 23, the high of 25. Why do I keep thinking this thing is muted? I think OBS updated and it just looks like it's muted. Another gap, but it does get closed here, and a bull gap gets put in. So we can see how it's still a little more trending due to being under the higher time from EMA and yesterday's sell-off. But gaps are getting closed. Every gap so far has been closed. This gap gets closed here. Now we get another gap with the same candle here to here. Again, it's a bear body bull and then a bull candle, so it's not the strongest gap, but it's a bear gap, and this gap actually stays open. See the high of 41. This, I'm just drawing it. So you could say like the 39 gap kind of got closed like this. I don't know if I could have just done that. We're gonna leave it down here just so you guys see. Gets tested. The 50% level 39's gap gets tested and it sells off. Let's look for some more gaps. Low of 60, 30, 50 even. High is 30, 50. So there's a zero height gap here. So that just means an even level. There's no tick here. I'm just visually drawing this gap. That's a zero height gap, so we actually can't see the gap, but it's there. 61 to 63, there's a gap. 61's low is 29.25. 63's high is 28.25. So there's a gap, and this is a bear gap with a bear body. So there's 3 bear candles, so that's good. That's also a bear micro channel with a gap, so bulls are trapped. And that gets a good leg. This leg is starting to shrink. We're at the low of yesterday's range, 16 with 76, 69. Rips up leg 1, pull back leg 2. The high of 70 is 21. The low of 72 is 21.25. So there's a 1 tick gap here. So this 1 tick gap is bigger than this gap. This gap we can't even see. This gap is 1 tick gap. High of 74 is 27.25. Low of 76 is 27.75. So there's a 2 tick gap here as well. That also gets closed with this sell off leg 1. Leg 1. Leg 1, pull back leg 2, pull back leg 3, bar 81. So there we have it. Broad bear channel. Bear gaps eventually stayed open. Almost all gaps stayed closed. This was the high of this bar is the only gap that stayed open. These gaps got closed. This gap stayed open. Let's see if it got the test. Okay, so it also got tested. There was a gap here, 192 here. So yeah. Hope you guys had a good one. Pretty interesting to see where we are in the markets. Yeah, this could be a setup for a bull bar, but this is a gap, and so now we'll see who. I think this is strong enough to get its own leg too. So we'll see how that comes. Maybe they get a wedge bottom before it goes up. It'll be interesting. Anyways, I don't like to predict. We just react. I'm going to save this because that gap is there. Have a good one, guys. Thank you for your time. Hit me up. Ask some questions. It's fun talking to you guys on Discord. I'll talk to you guys later. Thank you. Bye.